With stocks and crypto recently crashing, still lots of fear in the markets, many people are saying another leg down is imminent. The question is though, are the bears correct? Or will the market surprise everybody and do a massive breakout to the upside? Well, that's what this video is all about. So we'll be covering firstly the bear case as to why markets will probably be going down in the short term. However, then we'll look at the bull case as to why markets could surprise everybody doing a massive breakout to the upside. And then when in doubt, we'll ask the almighty AI and see which way Grok thinks the markets will be headed next. Okay, so first up, the problem with the internet is that there are now millions of different data points, and depending on your personal bias, you can find evidence for either direction. So let's jump in with the good old Buffett indicator. As Warren Buffett has said, this is probably the single best way to know whether the markets are overvalued or undervalued right now. And this reading suggests that the markets are massively overvalued. So historically, this has really been under 100%, and it divides stocks against GDP. When it goes over 100, it's typically overvalued. You can see the dot-com crash here peaked out at 160% before crashing back down to about 75. Great financial crisis went to 125 before coming down to about 70. We've had this mega run. It did peak out over 200%. We did get a big drop. However, it's back over 200%. So historically, a very high reading, and probably one of the main reasons why Warren Buffett made massive reductions to his positions end of last year. This is the first signal that says the markets are very overvalued and due a big correction. Number two, jumping into the crypto market, and this is the Ethereum USD chart. Ethereum is a great proxy for the altcoin market, and it's really been struggling. And then overlaid by into the cryptoverse is what stocks were doing just before the dot-com crash. And Ethereum has pretty much mirrored this exact pattern. And this would suggest that if it keeps going, it's probably going to bottom out in another week or two, suggesting another leg lower. This is coming from the crypto market before things start to pick up. And then number three, a great chart going all the way back to the 1929 big crash. And this is a trend almost 100 years, and it got touched. Can you guess? Yep, this was the dot-com crash where there was a good 50% pullback, and it's just been touched again. Yes, we've seen a 20% pullback, but this chart would also suggest that a bigger drop of 30 to 50% would be occurring. Now, this is only 3 charts for the bear case, but the point is, if you are feeling bearish and worried, there is always plenty of evidence pointing as to why the next crash is imminent. However, on the flip side, 3 points for the bull case as well. Now, anyone following global M2, so this is the global money supply, and risk assets and stocks are highly correlated to global M2. When money printing is going on, assets tend to go up. When money is contracting, assets tend to come down. And this big crash / correction that's been going on so far has just correlated to global M2. However, this is where we're at right now, signaling that the worst is now over and a big breakout is now imminent. So this is point number 1. Number 2 has to do with the US CPI and the big Fed pivot by Jerome Powell. For 3 years now, he's been doing quantitative tightening, reducing the Fed balance sheet and trying to get inflation down to this 2% mark. However, it's always cyclical. The business cycle goes up and down, and when the Fed pivots, interest rates will be coming down and liquidity will be going back up. Now, when it comes to the Fed's 2% target, US inflation is now at 2.4%. So this has come down massively from where it peaked out around 8 to 9%. And if trueflation keeps on being correct, inflation is actually going to be going lower. And all these big crazy things going on with tariffs right now are not increasing inflation. So even now at 2.4%, or if it drops a little bit lower, the Fed is going to have everything they need to do their pivot, in which case a massive breakout would be imminent. And then number 3 is the crazy tariffs that Trump's put on the entire world. And if we get some news stories this week that big trade deals have come in with India or Brazil or China or the EU, then obviously markets are going to rip. But then this could also be the flip side as well. If trade war escalates and things go down, then markets will probably take another leg lower. So you can see the news developments is more important than any one chart. But then also, if you didn't know, the US and Ukraine have signed a preliminary deal which would provide hundreds of billions of dollars over the coming years to the US, and in return, the US is going to keep backing Ukraine. Obviously, if this happens, this is a major step forward for the war to finally end. And if the war ends, markets are going to rip higher. So will this get signed officially on Thursday? That is what is in the pipeline. If it does, markets will rip. So as you can see, over the next 1 to 2 weeks, I don't think charts are going to be able to help. It's going to be news dependent. So with all that being said, let's see what the almighty AI has to say. Does Grok believe markets will be breaking out or breaking down? So here's the prompt. Almighty Grok, as you can analyze millions of different data points in seconds, we investors want to know over the next 1 to 2 weeks, which direction is the S&P and crypto going to go? A massive breakout higher or another big leg down? Ready? So S&P 500 likely volatile with a slight downward bias coming from the tariff uncertainty, but there's high valuations. It gives some near-term targets. A trade deal announcement might spark a relief rally, but no clear breakout or collapse is imminent. With crypto, it's correlated with equity and expect choppy trading. Altcoins are vulnerable if equities slide. No major breakout unless macro sentiment shifts bullish. Data suggests consolidation over a sharp move in either direction. So if you had to give a percentage split either way, so Grok believes for stocks it's a 60-40 split to the downside, so pretty much either way. A little bit more for crypto, 65-35. So as you can see, even Grok doesn't know which way things are going to break. With stocks and crypto recently crashing, many are saying that another leg down is imminent. And the problem with the internet is that now there are millions of different data points, and depending on your bias, you can find evidence for either direction. If you're feeling bearish, there's plenty of evidence suggesting markets will be going down. However, if you're feeling bullish, there's an equal amount of evidence pointing to an imminent breakout. And in all this confusion, it reminds me that all the greatest investors say no one knows where the markets will be headed in the short term. However, in the medium to long term, chances are they're going to be going up. And so the key message of this video is over the next 1 to 2 weeks, no one really knows which way the markets are going to be going. The biggest factor is going to be the news stories developing this week, and only in hindsight will people say, told you so. So there you are, guys. Hope you enjoyed. Now you let me know, are you feeling bullish or bearish right now? To get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. If you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. videos, and I'll see you in the next video. Bye for now.